But now let's dive into our featured story of the day, discuss a $14.3 million Bitcoin price prediction, followed by some bonus predictions from the Giga Chad Michael Saylor, ranging from $10 million to $100 million per BTC. Let's break this baby down. Let's start right here. Joe Burnett shared, Bitcoin will become significantly less volatile once it surpasses the total value of the global real estate, which currently sits at $300 trillion. That will take Bitcoin to an estimated $14.3 million per BTC. Let me know if you agree or disagree. They also say the total addressable market in the entire world is north of $900 trillion. He also recently tweeted, if suddenly nobody in the world could mine more gold and anyone could teleport it over the internet, how much more valuable would gold be? Well, 15 trillion would mean a $714,000 Bitcoin. This is the extreme bear case for Bitcoin. Let me know if you agree with that extreme bear case of 714,000. Now for some bonus predictions. Michael Saylor, when he was interviewed and they had a conversation on Patrick Bet David's podcast, he shared when asked about Bitcoin and where the potential path would lead us. Here's what he wrote. Bitcoin, not wrote, but shared and I transcribed. Bitcoin is on a path to be worth $100 million, which means that the US dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger knows this. And that's quoting the Giga Chad, Mike Saylor. So they know they can't stop it. Now, clearly, Munger has ascended and left this planet since that interview, but Warren Buffett still knows what's up. Now, also quoting Saylor from here, from another interview I transcribed word for word. I shared this. It got 140,000 views. Got a lot of love, so I want to reiterate it here. Bitcoin is about to 425x. Here's why. New Michael Saylor prediction. Quoting him word for word. Because Bitcoin is just pure money. It is just as effective at $100,000 a coin as 10,000 a coin. And at $1 million a coin, it's just as effective. And at 10 million a coin, it's probably more compelling at $10 million a coin than 1 million or $100,000 a coin. It's kind of universally scalable asset that gets less risky. The only thing that is going to change, in my opinion, is when it was super risky and scary, below 10,000, you were getting 100 to 200% a year annualized gains. And when it got a bit more understandable between 10,000 and 100,000, your gains go to 40 or 50% a year. And then at some point, they go to 30% and 20%. And in the extreme, if everybody in the world understood Bitcoin, it would be 20, 30, 40% of the wealth in the world. Very powerful words there. So it would be $200 to $300 trillion in today's dollars. And then the price would be appreciating at the rate of global inflation in the fiat currency. So if the gold inflation remains at 7, it would still remain at 7, and then it would appreciate a little bit more because of the productivity of the people that adopt it as a treasury reserve asset. But wait, there's more. Here's another prediction from the Giga Chad. And when I shared this, I think this is the most viral prediction from Saylor I've received on X. Let's see. Yeah, 423,000 views. This one went absolutely viral. So I'm going to read this one to you. And I think, I think that's it. So yeah, here we go. Why you need to own at least 0.01 Bitcoin. 2024 prediction. Just note this prediction was made many months ago, so it's not right now, but nonetheless, still very valid. Quoting him here. I think there are only 3 things relevant right now, and here are the 3 things. FYI, this was before the ETFs went live. The halving is coming with 100% certainty. Well, boom. It's now in the past. It has already come. And as far as I can see, most of the selling of the Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. In fact, again, it's now behind us. It already happened roughly 2 days ago. And then we know the spot Bitcoin ETF is a coming. And when that comes, we plug into Wall Street and the entire banking system. Well, guess what? That came January 11th officially. And now the institutions hold over 800,000 Bitcoin as predicted. And then finally, the fair value accounting is coming. And when that happens, the objective will go away. And we already got the green light for the fair value accounting, which officially takes place, I believe, later this year. So game changer, game changer, game changer. All three things have occurred. And now you're going to introduce this as a conversation into hundreds of boardrooms. It's a coming. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. At the end of the day, corporations hold only two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you'll get all these people holding real estate, holding commodities, holding gold, holding ETF and S&P indexes and the like. And if they start to reallocate, and they will, 1, 2, 5%, then you're going to have something that has never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Let's go. Every other ETF in the world is on an asset that is not scarce. It is inflationary. And he makes a brilliant point there. You can make more buildings. You can make more real estate. You can make more gold. You can make more commodities. You can make $4 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when 100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot and ETF of gold because gold is an inflationary asset, and you can't compare it to the ETFs on real estate or on bonds or on equity. You really have to say this is the first time we have ever plugged Wall Street into an asset that you cannot produce any more of. Exactly. And so nobody knows what will happen except that if you reason from first principles, you know that it has got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better. But let me lay out 3 possible ways to invest into Bitcoin. 1, if you buy Bitcoin, the underlying asset. The second, you can buy the spot ETF. And the third, you can buy MicroStrategy. So we've talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put it in place of a parallel custody, compliance, compensation control systems. That's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're getting 1-to-1 correlation. For 1 million you put in, you're getting 1 million of Bitcoin. What's the positive? It's marginal. It's good collateral. I can buy in a second, no money down, and I don't need to build parallel custody control compensation systems. So all my problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. Okay, so if I charge you 1% per year over the course of 20 years or over the course of your lifetime, it means that I take 20% of the money you invested at 1%. So there you go. A lifetime of using these Bitcoin ETFs could cost you roughly 20% of your total investment. Whereas if you self-custodied your Bitcoin, you get to keep 100%. And did I mention it's also unconfiscatable if you properly self-custody your BTC? I just had to throw that out there. But anyways, so there is a cost. 50 basis points means I get 10% of your money, approximately. But having said all that, I would pay you 50 to 100 basis points in order to be plugged into Wall Street. Not a problem. It's a lot better than the alternative, which is rebuild all their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you can think of as a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call it an ETF because we are not a financial company, but we have 4.4 billion plus a Bitcoin and 2 billion plus of debt. So what we have done is we have levered the balance sheet with debt that costs us about 1.5% interest. So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue the junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have 4.5 billion of Bitcoin, but we don't charge 45 million a year. So the real idea here is that if I created an investment vehicle that paid you a yield instead of charging you a fee, and what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it. How many of you would take advantage of that offer? Borrowing $1 billion at 0% interest? Yes, please. But But anyways, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So if you have $1 billion invested and you're getting a 2% yield, you're actually picking up $20 million a year instead of paying $10 million a year. So the dynamic of a company is very important. So you can imagine that if I don't charge you a fee and if I have cheap leverage, the benefit accrues to the common stock shareholders, because I went and I borrowed $2.2 billion at 1.5% interest and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year? Well, let's say it was 15% a year. Then we're scraping 14% positive real yield off the debt. And so that would be 14% of $1 billion or more, actually 14% of 2.2 billion. That would mean 300 million a year that accrues to the benefit of the common stock shareholders. You see, this is the benefit of being an operating company. We can every quarter choose what to do. So some quarters we would issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity, other quarters we just use our own cash. So the answer is there's always going to be a good market and there's always going to be a bad market. There's things you shouldn't do and there's things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, then it should basically correlate 1-to-1 with Bitcoin after you pay the fee. Then you buy a spot ETF. But if you wanted to actually try to outperform Bitcoin, like MicroStrategy has outperformed Bitcoin, our performance over the course of the 3 years is higher than Bitcoin's performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets and we sell $1 billion of equity, we actually capture 300 million of accretion to our shareholders. So there you have it. That's coming directly from the Giga Chad himself, Michael Saylor. Let me know your thoughts on some of what he just shared, and as well as Bitcoin hitting 14.3 million and overtaking the market cap of real estate at 300 trillion, and eventually even hitting 100 million per coin, as Michael Saylor believes will happen. Holla.